So basically the goal of our webinar today is the last couple webinars, we've noticed a lot of questions coming up. So we really wanted to just provide a forum for any prior participants to really have a Q&A session with Ken and I to have you ask any questions that maybe you don't have answers to yet that you want more clarification on. We did get some questions that rolled in via email. We will be answering those as well, but at any point if you have other questions, please just pop it up in the Q&A and we will make our best effort to answer all of them. I guess just by way of a brief start, the loan application was released on May 15th. Last Friday at about 10:30, 11, on a nice holiday weekend, they released a interim final rule, which is their way of writing regulations for this on the forgiveness. Those IFRs didn't really change a whole lot based on the loan forgiveness application. We put out some information on that on Tuesday of this week. I think the biggest confirmation for me was, if you've been on the prior webinars, that it appears as if payroll costs will be allowed to be either paid and or incurred, meaning that any payroll you have coming into the period that you pay, even if it's incurred for a prior period, will be an allowable cost, and any payroll that you incur and paying the period after, so long as it's your next regular payroll date, will be allowed as well. So I think that clarification was super helpful. There was about 7 or 8, major takeaways that came as a result of that. But I think that clarification was very interesting. I think it was a good codification of all of the different items that popped up. And along with that update, they also gave what was a kind of look into the review process a little bit. It was kind of anticlimactic. Basically just took prior IFRs and put them all together into one, but as a whole, I think it gave us a little bit of clarity as to what they're looking to do. Opened up some cans of worms, again, where they explicitly say in the IFR that the SBA can review any loan at any time, which is a little different than what was stated under the prior thing, that loans under a certain amount will be deemed okay for the economic necessity. So I think that's a real difference there. Just want to double check anything else major on the new.
The other thing, Ed, that was pretty interesting, and we talked about it last time, is that things like utilities and rent were going to be on the, if you pay one of those during the, from a previous period in the current period or during your 8-week term period. So let's say your 8-week period went from April through June and you paid your March rent in April, then you were good for the March rent.
Correct.
So that would be an extra, you could actually get 3 months or more of rent as long as you don't go over that 25% threshold.
Correct. Yeah. So that's a great point, Ken. They did not, they specifically had said that any rent that you pay during the 8-week period will count. At least any prior rent. A prior rent was used as an example. So we know that's definitely okay. And the only thing where prepayment was mentioned, and I've read this a couple places now, is a prepayment of mortgage interest is not allowed, but no other prepayments were made disallowed. And one other item that I thought that came up, this is the one I couldn't remember, that there's a lot of question on hazard pay or bonuses that could they or could not they be used. The IFR has made it very clear that bonuses and or hazard pay are allowed, and so long there's no real restriction on those, they're considered other forms of compensation. So additional compensation up to that $15,385 limit, basically in any form possible, has been made fair game as it comes to all of that. So Ken, do you have any other updates you want to share quick before we kind of dig into the questions?
No, I mean, it's funny. What we were talking about earlier is the first question that pops up. So I'll deal with it on the first question.
All right. So first question here is it true that an EI provider agencies may not be qualified to apply for the PPP loan because they get reimbursement?
All right. So from a loan forgiveness perspective, It has been our position all along that if you get government funding for for services that you provide, you'd be hard pressed to ask for forgiveness for the salaries that were incurred to directly provide those services. Having said that, it's something that we've been asking for clarification and going. If this is not something that's going to come out of the SBA, we never expected an answer out of the SBA for this, but we were hoping that we could get it from the funding sources. So I know we've talked to several of the funding umbrella organizations, and they have posed questions to both the Department of Health and to the State Education Department, and I'm sure other funding streams also, to ask these types of questions. At this point, there are no answers on this. I can tell you that what the State Education Department has said is that they've shared it with the CFR Interagency Council. So there's a council of leadership within the 4 agencies that settle through the Consolidated Fiscal Report, which would be the Office of Alcohol and Substance Abuse Services, the Office of People with Developmental Disabilities, the Office of Mental Health and SED. They're reviewing it, and they're going to try to make some level of decisions as a group on how this will be treated for purposes of the Consolidated Fiscal Report and the like. Also, this has been shared with the Department of Health on multiple levels through multiple sources, and we're waiting for some answers with respect to the Department of Health in terms of how they're going to deal with this, which would include early intervention and I would assume other Medicaid funded agencies. So at this point, we're not sure of an answer. Again, it's still our position that it may not be an allowable cost. So just keep that in mind, that you might not be able to ask for forgiveness for the purposes of your PPP loan. But at this point, it's still up in the air. We don't have a deadline as to when the PPP loans have to be submitted at this point. So I think it's in everybody's best interest to just sit back and wait for this to unfold and see where the answers come out.
Okay, great, thank you. So I'm going to jump around in the Q&A here. We will try to get to as many of these as possible. So are copy release payments considered utility costs? They're not considered utility costs, but they should be considered a lease of personal property and therefore an eligible forgivable cost under the PPP program. So again, not a utility, but it is a lease of personal property and therefore is an eligible cost under that, that item. Under your key update post, does the payroll cost at the beginning of the cover have to be prorated or in total? Based on the way the IFR is written, all the interpretations that I have seen is the total, because it is the payroll amount paid as you are in the covered period. So it appears like the payroll cost will be when paid, and that is going to cover the entire payroll, even though it does only incurred partially in the period.
There's a question here. At what point is the loan officially forgiven? After the lender says it's forgiven within 60 days or after the SBA reviews and pays the lender an additional 90 days?
So the way the limited guidance that I saw on the forgiveness works, that wasn't entirely clear to me when the actual official forgiveness happens. From what I understood, it was the lender makes the decision within 60 days, informs the SBA, and then the SBA has 90 days to review after that. So I believe is when the lender makes the decision is when the loan will be technically forgiven. But I think that also puts the lenders at an exposed position wherein, let's say they say it is forgiven, the SBA does a review and comes back and says, no, it's not forgiven. Well, that could lead to a exposed lender position. So that's why I think it's probably going to be the more conservative. And after the SBA does any potential review or gives the all clear on that one, so when the SBA pays. Remember, the loans have an inherent 6-month deferment period. So all you would technically be accruing is the interest. And I think they're going to find a way to work around that, that interest there. So we don't 100% know. It wasn't super clear to me when I read through the regulations and any other updates that I saw on it. I don't think I saw a definitive answer on that.
One of the things they also said as part of that is if you do have interest and you start paying the loan back before you get approval on the forgiveness, once the forgiveness goes into play, you will be forgiven for the debt and the interest component of it. So if you've already paid some of that interest, you will get a credit for the interest you paid.
Yes, you will get, if you pay some, you will get paid back accordingly. That's a great point, Ken. Can you give guidance on PPP funds for profit sharing plans, i.e. can we use the PPP funds to pay the 2019 profit sharing plan that is not yet funded? Can we fund a profit sharing plan for owners or employees or just employees? Can we only fund profit sharing for the prorated amount of the estimated full year profit share? They have not given nearly any guidance on what retirement costs mean, how they want to calculate it, what that really means. Now, retirement costs are part of payroll costs. Payroll costs are costs that are incurred or paid during the period. So I could see an argument as to how you could use PPP funds for your 2019 profit sharing payments and or for the prorated of 20 made during these periods, because it is a payroll cost that says paid and or incurred. That being said, absent definitive guidance, I don't know if I would go that route. I think it's still very ambiguous. I think what they were really looking for here was to cover 401k matches that are made period to period or 403b matches that are made period to period. I think there's the intent and or any defined benefit contributions made period to period, but absent that actual guidance, I don't know how I would go about working through that. And then, the second part of that question, is it just for owners or for employees and owners? That's become a real interesting question in the past, basically since the regs got released on Friday. And it really has to do with how they wrote the piece of legislation that covers owners. There was no reference to any owner changes, the exception of Schedule C or general partners in the prior IFRs or applications. So this really feels like if you're an S Corp or a C Corp, they've gone back and changed the rules. Now, if you're an partnership or a Schedule C proprietor, retirement contributions were never allowed because they automatically came off the top of your net self-employment earnings. So they were never there. But now there's a question on if Schedule C or C Corp or S Corp or C Corp owners will be able to do that. And I haven't seen, my first thought is a lot of people have the sky is falling, but then I started to read it more, and I can see now that it's a parity item between partnerships, S Corps, and LLC that they're maybe trying to enact. So I don't 100% know if they're 100% going to allow owner retirement as that. They allowed it as a calculated cost during the application process, but things are changing and changing a lot, so I can't give you a definitive answer on that.
Okay, so the next question is for me. I have a school receiving funding from the New York State Education Department. They have a parent company. The parent company allocates certain costs to the school. Can the parent cost claim forgiveness on its own PPP loan for those overhead expenses allocated to the school? So from an overhead perspective, overhead includes potentially some salaries for accounting staff, HR staff, IT, things like that. It could also include some utilities and those types of costs. So this comes down to an answer that I'm not sure of. I'm going to say depends. Again, I think this comes back to the clarification that we're still waiting for from the New York State Education Department in terms of how the costs are going to be handled at the school level. Because if at the school level, the PPP funds or any forgiveness would be treated as offsetting revenue, then I think you're in a situation, because remember the way things work within the consolidated fiscal report or any cost report at that point, any related party costs are pass-through costs. You don't get to step up the cost. It's just a related party actual cost. So if you're getting funded for those costs through the school, once again, I think unless we get some guidance, I think you might be hard-pressed to ask for forgiveness at the parent level when you're just getting funded from the state for those costs at the school level. It's the same cost. All you're doing is pushing that cost down from the parent to the school. So again, at this point, we don't have a definitive answer on this. We're still waiting for guidance, and that should come out hopefully as soon as the CFR committee is done reviewing this. But I would say that that is an area of a very, very gray area, and you're in a situation that I would really hesitate to count on that at this point until we get guidance.
Great, thanks. So this question is, are we prorating the partial month of utility at the end of the covered period? Yes, you are. That became clear in the guidance on Friday, that any prorated or any utility that is incurred but paid after the end of the covered period, which is allowed, again, you can incur and pay so long as it's paid by the next regular billing cycle, but that gets prorated for that period. That was covered in the IFR as an example.
All right, next question. Again, it's another school question, so I'll take it. School has substitute teachers that they employ as needed. They want some clarity surrounding how that would impact the FTE calculations. So I think this is, even though it's a school question, I think it goes beyond the school. And I think this really affects a lot of individuals. So the FTE calculation, the way the FTE calculation works is you have two base periods that were established within the initial regulations. Those base periods were February 16th of 2019 to June 30th of 2019. And it was also January 1st of 2020 to February 29th of 2020. So what you would need to do is you need to calculate your FTEs during each of those two base periods, determine how many FTEs you have, and then you would compare that to the FTEs during the 8-week period of time. And there are a couple safe harbors that were introduced 2 weeks ago in the new regs. And we'll talk about that in a little while. As part of the rules that came out with respect to the FTEs are now calculated based upon a 40-hour work week. So what you would do is you would take the number of hours a staff person worked each week during each of the two base periods and during the 8-week period of time of your loan. And you would calculate that in terms of hours worked divided by the 40 hours to come up with what your average FTE is to do the calculation. They also threw in a simple method to do the calculation where if anybody worked under 40 hours, you can automatically count them as a half FTE. So these are the different parts. And I know it gets really, really complex here. So you can either use the simplified method where everybody's considered a half FTE if they're under 40 hours. And if they're 40 hours or more, they're considered a 1 FTE. Or you can do the calculation based upon actual hours divided by 40. Having said that, you would then look at your 8-week period of time, compare that to the lower of your two base periods. And if you have a decline in the number of FTEs, there's a penalty associated with it. Unless you meet the number of employees during either one of two safe harbors. So in this case, if you have a lot of subs that you ended up letting go, those subs are going to impact your FTE calculation because they will not be there. They would have been there during the base periods. They will not be there during the 8-week period unless you bring them back to work. And when I say bring them back to work, one of the clarifications that came out this past Friday was somebody does not have to work in order for them to count towards the forgiveness. If you're paying them a salary, whether they work or stay home, they're still counted towards the forgiveness, both from an FTE perspective and a salary perspective. In addition, if you get letters from your staff that says they are not coming back or don't intend to come back, and you need to get that in writing and supported, they also do not impact your FTE calculation. Also, if you fire someone for cause, they don't impact your calculation. Or if someone resigns, they don't impact your FTE calculation. One thing that did also come out during the last week is if you do send out that letter telling somebody that you want them to come back to work and they say they are not coming back to work, the new regulations made it clear you have to notify unemployment to that effect.
I'm going to take a question off of one of the ones we got via email. So a loan funding date was April 20th. They are on semi-monthly payroll for the 15th and last day of the month. So they are including the payrolls of April 30th, May 15th, and May 31st. Since our fourth payroll is on Monday, 6/15, Could the forgiveness count, or should I reschedule the pay date to 6/12? So what came out in the application and in these regs is that any payroll that you incur and pay by your regular scheduled date, you can take forgiveness for. So under this scenario, a semi-monthly person that has 430, 515, 531, they do not need to reschedule the pay date. They will be able to take the prorated pay through June 12th, paid on June 15th, that was incurred and paid by their next regular cycle. So you don't need to move your payroll dates to get the forgiveness in that last regular cycle. Also, Ken, you should be able to turn your video on now if you want to give it a shot, if you're still able to.
Okay, I just went completely dead.
Okay. Oh, if you see a little chev next to where it says video, click webcam on that. Not, but they showed me how to do it. So if you can get it, great. If not, don't worry about it. But again, point clear, I wanted to make there. You don't have to move your last payroll date. All right, now you just got to put the right camera on, or what's wrong with this? So one question, can you do 5 biweekly payrolls? Yes, you can, based on our understanding of how all of this works. So you can do the 5 paid, there we go, the 5 paid, and then, the 4 that are paid, and the 5th one that is incurred and paid by your regular payroll cycle. In regards to the alternative
when I wasn't on camera.
In regards to the alternative covered period, is the method available to companies that have payroll once or twice a month, not biweekly? No. The alternative covered payroll period is only if you have a biweekly or more frequent payroll. So if you have semi-monthly or monthly, you cannot use that.
I got a question here. If state or foundation grants cover certain personnel payroll, must those be excluded from the forgiveness calculation? I think, again, this comes back to something very similar from what we've been seeing, what we've been talking about all along. If I'm getting specifically funded for a particular cost, and it's under, in this case, it sounds like it's a deficit funded contract, which is an expense-driven contract. So if I'm getting directly funded for it, I think then you do have a situation where potentially there would be a concern if you tried to ask for forgiveness for something that you're directly being funded by someone else for. So again, I think this comes back to what we need to get clarification for. And I think as the clarification becomes available, obviously we will push that out to everyone.
One question was, is there a cap on bonuses, to any caps on bonus limits, or up to the threshold of 15,384? So it is up to the threshold of 15,384 is the cap on bonus limit based off of what was said in the IFR. They said bonuses are considered just another part of compensation, and they are allowable up to the cap for the period. So you can do that, yes.
If you get government funding for some of your employees and you usually give a retro raise in June, if that is your common practice to give retro raises in June, and you go and you give a retro raise this year, I would think, and Ed, tell me if you think differently, but I would think then if that's common practice for you, that retro raise is being paid in your 8-week forgiveness period, it's considered compensation paid up to that $15,385 per employee, that retro raise would be allowed if that is not your normal practice.
Yep, I would 100% agree when it comes to that. For the purpose of PPP loan forgiveness, are guaranteed payments to LLC members considered payroll expense? They have not given any more guidance on how partners will work, or any more definitive guidance on how a partnership will work. I would say that since guaranteed payments are part of net self-employment, and net self-employment is what your forgivable amount is based on, the answer is a roundabout yes. I think people want to see a more direct one, but where the question comes in is in the IFR of how to apply for Schedule C and by proxy partnerships. They basically said the forgiveness will be based on your 2019 net self-employment, which is a little weird versus I think everybody else's kind of system. But that was in that particular IFR, more Schedule C driven than partnership driven. I think people are still waiting to, get a better understanding of that. But I think, generally speaking, a guaranteed payment will be a forgivable expense.
Next question: if we can include, even if we can't include salaries paid for reimbursed staff, they will be able to count towards our FTE, right? So again, I'm not sure exactly what the question's asking, but what I believe it's asking is that if I've got salaries that may not be forgivable because they're being funded through some sort of government funding mechanism, you still have to count those individuals towards the FTE calculation to determine if you get one of the FTE penalties. And if that's the question, the answer is yes. You would have to look at all staff, not just forgivable staff.
Yep, I would agree. What was the threshold being considered as completely forgivable? So far there is no particular item there. I said I would think there's a potential that could happen, but that is my conjecture. There is no legislation that's remotely mentioned this. I heard it on one particular item or one particular thing I had heard about that someone said a senator may have mentioned it. So we're playing a game of telephone at best there, but I was thinking just from a practicality standpoint, it may happen. But as of today, there is no completely forgivable. And just kind of while I'm on the subject, because I think it's somewhat relatable, there are two bills currently proposed to expand the 8 weeks. The House has it for 24 weeks, the Senate for 16 weeks. They are proposed bills. There's bipartisan support on these, but there is nothing passed yet. So we can't definitively say that it will be expanded. So until it does get expanded, you need to act as if it is not getting expanded.
Just lost my questions. Go ahead, Ed. I get my questions back.
Are auto leases considered personal property forgivable? The Schedule C IFR specifically mentioned autos used in the business. Now, I would make sure I tread carefully here with a owner-used vehicle that may be used in the business partially. I think their intent was to cover more things like trucks and or Uber drivers where the vehicle is the primary item, but it is technically and was listed as a, they mentioned a truck used in the business as an example, as a eligible lease for personal property. So again, if it's an owner used vehicle, tread lightly would be my kind of expectation.
So one of the questions is, during one of those base periods, January 1st to February 29th, if an employee only worked 3 of those weeks, are we allowed to average their hours over the full 9 weeks or take the average of only the amount of days they work? So what you would do is you should be looking at each pay period as a separate FTE calculation. So you would take each pay period, you'd calculate the FTEs for each pay period, then you'd average all of the pay periods to come up with what the overall FTE is. So if they only work 3 weeks and you were paying people on every 2 weeks, they would only show up in 2 of those pay periods. You would calculate their FTEs for those 2 pay periods, and all of the pay periods, they would be a 0. So then when you averaged it out, you'd end up with whatever your result is.
Okay. Accrued vacation that is paid is under the 100K cap considering other payroll costs? I would say yes. Same thing, I think here. A semi-annual teacher stipend payment counts as paid during the 8-week period. It looks like it was a very, very broad, loose, easy interpretation. So anything that you pay that is compensation up to the $15,385 will be allowable based on the most recent guidance that has come out.
One of the questions that's here is asked about unemployment. There's been a lot of questions about unemployment. The question is, can you certify for unemployment if you are self-employed, if you get the PPP loan? If you're getting the PPP loan, that's considered compensation. So you are getting paid. So if you're getting paid, you can also get unemployment. So if you're getting the PPP loan, you cannot be certifying and receiving unemployment during the same period. This poses a problem at the business level also. So if you have staff who are off from work right now and they're collecting unemployment and you're going to bring them back on a part-time or wholly basis, you have to be cognizant of the impact that's going to have on them from an unemployment perspective.
Any idea for 78 weeks? We just covered that one. I'm going to do one that got emailed to us. Our organization sends performers into hospitals. All of our programs have been suspended by our partner hospitals until further notice. We have been doing some virtual programming, but it has not been possible to do the same level as in-person programming. So our pay levels are clearly going to be less than they were when we were in the hospitals. How do we account for that since it's largely out of our control? And my answer there, and one thing I just want to highlight is you'll notice that we have a real cross-section of different industries and businesses here. So a lot of questions Ken are answering are, towards, things that are in his specialty. I'm answering more towards my specialty. But a lot of the answers that we're giving, what we say there can definitely have an impact on how maybe your organization that doesn't face all of the same pressures, but the general advice is kind of still the same. So again, this is a nonprofit that more or less has performers that can't perform services. And the first suggestion that Ken and I have been making to anybody we speak to is, and this is a little less relevant than it was 3 weeks ago, but still a good answer. Every organization or business has their, if I only had time list, right? All of those things that you were looking to do, if you only had the time, clean up file rooms, shred files, change systems, get, an all-hands marketing meeting together, revamp marketing plans, any of those things where you always want to do it, but, the business itself has just come first. The whole phrase, work on your business, not in your business. Well, for organizations that can't provide services right now, this is a golden opportunity to do those things. So we've been recommending, hey, use this thread as an opportunity to work on your business or your organization. Now, once you've exhausted that, the idea partially of the PPP program, and it sounds a little weird to say this, is they want you to keep people on payroll more or less regardless of if they were providing services. So in the case of the question there, you would in theory try to pay them a similar wage and rate as you paid them to not perform the services as you did in the past. That was why they wanted to give you this PPP loan, was to keep people on payroll even if you weren't able to provide services or be open.
Something that maybe I should or shouldn't say, but I was talking to a client yesterday, and one of the things that they were trying to decide is what to do. They have a lot of employees that are on unemployment, and they want to look to potentially bring some of them back because the number of FTEs have declined. And one of the things they were considering doing is, because as I mentioned earlier, under the simplified method, if anybody works less than 40 hours, they're considered a 0.5. So if before they went on unemployment, they were working 35 hours a week, and now they're working 10 hours a week. In both cases, they're still considered a 0.5. 35 hours is less than 40, 10 is less than 40. So in both cases, under the simplified method, they're a 0.5. There would be no decline in FTEs if that's the case. So what they're looking at is potentially bringing people back not on a full-time basis, but on a part-time basis. So if people are collecting unemployment, as long as they are 60% unemployed or more, they're entitled to collect some level of unemployment. So if I let someone go for 40% of the time, they can still collect unemployment, and I believe they still get the $600 add-on that they would be entitled to. So you can bring them back for 40% of the time to get your FTE count up, and then for the other 60% of the time, they can stay on unemployment, collect the unemployment check for the 60%, plus their $600 add-on. So it's, again, a way that you can ease some of your staff back into the workforce or back into the payroll to help you from a PPP perspective and still allow them to continue to collect unemployment.
What is the advantage of using the alternative payroll periods if you have a biweekly pay period? The primary advantage is going to be that you can align everything up with your normal pay periods, and you don't have to worry about doing proration calculations for that payroll that's going to stop in the middle of your covered period but be paid after the end of it. So it's an administrative convenience thing, and by proxy, anything I think that extends the period, even if only a couple days, is a welcome thing for many businesses. But the main benefit is going to be alignment of your payroll period for administrative convenience.
And remember, that can only happen for someone who's paid on a biweekly or less basis. It cannot be someone who is semi-monthly. So if you're semi-monthly, you can't use that. Once the 8-week period is over, if needed, can an organization make changes to the staff like reductions? Will that staff reduction after the 8 weeks affect the forgiveness? Potentially the answer is it depends. And the reason I say it depends is if you look at things from your base period to the 8-week period, if you have enough staff to cover you during that 8-week period to equal or exceed the amount of FTEs you had during the base period, then yes, after the 8-week period is up, you can reduce the staff, and that's not an issue whatsoever. If, however, you don't have enough FTEs during that 8-week period, remember that there's a safe harbor as of June 30th. So if you continue to hold on to those staff through June 30th or bring on additional staff as of June 30th, it could help you to meet that June 30th safe harbor, which will help you then from an FTE calculation. But there's nothing in the regulations that says that you have to keep the staff on for any specific period of time. You can keep them on as long as you want to, based upon your forgiveness. Also, though, remember, as Ed mentioned a little bit earlier, that forgiveness period may be extended. So if you let them go after 8 weeks and they go on unemployment, it may be tough to bring them back. So again, nobody knows yet what that forgiveness period is going to look like.
So one of the questions that I've seen pop up, and I thought I saw it, and I've seen a couple of variants of it here, has to do with how the salary reduction and FTE count are going to interplay together. So I think the other update that we didn't necessarily address yet, but I figured we would during the Q&A portion, was on the IFR that came out on Friday. They specifically said that there will not be a double penalization for a FTE and salary reduction. So conceptually, how they explained it was, you have somebody that was being paid $1,000 for 40 hours worth of work, and you've now cut their time to 24 hours worth of work, aka cut them from a full FTE to either a half or a 0.6 FTE, depending on your calculation. But you've also cut their salary compared to what it was on the prior quarter, which is a double penalty scenario. That won't occur. That the penalty only comes into account if you were to also cut that person's rate of pay. So the salary reduction is largely going to be based on a rate of pay, but it does provide a specific exemption that you will not be double penalized for a reduction of FTE on a salaried employee, so long as you did not cut their rate of pay. So that should not affect people, more than one way.
There's a question regarding federal financial assistance compliance, like for Title IX for independent schools. Again, the SBA, does that impact the SBA forgiveness? Again, at this point, we're not going to get regulations from the SBA. The SBA is basically saying everything is forgivable if it's an appropriate cost. This really has to come from the governmental source that's providing that federal assistance or state assistance. And again, I think we're going to start seeing some answers because there are a lot of these questions now being asked. So we should hopefully start seeing some of these answers within the next month or so.
This question come up a couple times just to confirm. So the entire payroll cost for a period before and after the covered period can be included in the forgiveness calculation without prorating. No, that's not entirely true. Any payroll cost that was incurred before the covered period but paid in the covered period is an allowable forgivable cost. Any payroll that was incurred and then paid by your next regular payroll date, that prorated payroll that was incurred and then paid after can also be included. So again, coming in, anything paid will be okay. On the going outside, it's a proration based on how many days were incurred during your covered period.
So again, if your covered period ends June 5th and your payroll goes through June 15th, you would only pick up June 1st through 5th as part of that accrual that Ed's referring to, and the 6th through the 15th would not be picked up as part of your 8-week period, forgiveness period. Question regarding a restaurant that had individuals who were terminated for cause during the base period. And remember, you have 2 base periods. You have the base period from, as I said earlier, from February 16th, 2019 to June 30th, 2019, or January 1st, 2020 to February 29th, 2020. But if you terminated people for cause during that base period, then those individuals who you terminate for cause will not impact your FTE calculation unfairly.
Can you do 3 months rent? So long as it's paid within the period, yes, you can do 3 months rent. It's paid and or incurred and paid after the regular period. So you can do a month back rent and 2 in the period. You can do 3 in the periods, so long as it's paid within the period. That's going to be crucial to doing that.
If a loan is approved dispersed in the middle of a payroll period, pay period that will be paid after the loan is dispersed, will that be included in the calculation of forgiveness? Again, as Ed mentioned before, it's paid and incurred. So on the way in, it's anything that's paid during that 8-week period, and on the way out, it's anything incurred.
We had someone resign the week before our loan was funded. Would that count towards an exemption or not? They haven't addressed that specific scenario yet, but I believe that will count as an exemption based on kind of how the trade winds are blowing when it comes to that. If you were asking me to do your application, I would argue that should count as an exemption. I think that's a good faith determination there.
Just going through the questions, because there's a lot of them that are similar. Again, follow-up question regarding government payments towards salaries. Although there might not be a time frame to ask for forgiveness, if we have a fiscal year, the cost report is due December 1st. So if we do not know if SED, OPWD, etc., can be forgiven, what do we do in terms of ensuring that we have a timely CFR filed? Hopefully we'll get answers before CFR is due, or before any cost reports are due. Again, this is information that is now sitting up with both SED and DOH, OPWD, OASS, and OMH. So they're fully aware of the issue. It's been addressed. We've heard that they're having meetings to discuss it. So, hopefully we will get some answers relatively soon. If you're June 30th, you have till December 1st. I mean, if we don't have answers by December 1st on this stuff, we've got bigger problems.
So again, I was funded on June 30th. I paid bi-monthly. So what payment periods count? You can count April 30th, May 15th, May 30th, and then you can count effectively all of June 15th, because you can count the period from June 1st to June 12th paid on June 15th as part of your payroll period.
If we own our building, are we permitted to include any operating costs instead of rent, such as security, elevator maintenance, etc.? The only expenses that are allowable is going to be your mortgage interest, is going to be unallowable and forgivable costs, as well as the utilities that Ed had mentioned earlier. So things like security, elevator maintenance, and stuff are not allowable costs.
There's been questions on the EIDL advances. The EIDL advance will reduce your forgiveness amount. This was addressed in the application itself and was addressed in the IFRs as well. So any EIDL advance you receive will reduce your forgiveness amount dollar for dollar. So if you receive a $3,000 EIDL advance, your forgiveness amount will be reduced by $3,000.
So Ed, I'm going to throw this question to you. I'm sorry, because I'm just not 100% sure of the question. If someone was entitled to $24,000 and the bank made a mistake and gave them $41,000, I would think they could only ask for forgiveness for the $24,000. They should return the differential. You agree?
So they were entitled to 24 and got 41?
Yep.
So then I would return that delta right away, because I think that's a bank error and I wouldn't want to be on the hook for that. And I think your forgiveness would be limited to the 24 that you were originally entitled to.
I agree. That would have been my answer. I just wanted to verify. Also, I think, Ed, you already mentioned this, had to do with Safe Harbor 401k, where you make a contribution once a year. Again, I don't know that it's clear in terms of what the regulations are with respect to that. If that Safe Harbor is paid within the 8-week period of time, how that's going to be viewed. When that pension rule was put into the regulations, I think, as Ed had mentioned earlier, I think it really was more for the matching contributions and for defined benefit plan contributions that have to be paid on a regular basis, not necessarily for a contribution that's be paid once a year. Clearly, if it's not paid within that 8-week period of time, I don't think there's anything you can do. If it is paid during that 8-week period of time, again, I think we just need to get some additional clarification on that.
Can you prepay other costs so they are paid during the covered period but cover expenses outside? With the exception of a prepayment of mortgage interest, nothing has been stated on that otherwise. They feel that because that 25% cap exists, that will effectively limit the utility of that. So I would say yes, you can, but remember, you can only use 25% for non-payroll costs.
Right, so there's a question here. It says, my loan was based on 2 employees, but 1 employee left for another position on March 1st. I was able to hire a part-time employee after receiving the loan for a much higher rate than the prior. And my FTE is now only 1.5, but the weekly payroll amount is the same as used in the calculation. I will pay out 75% of the loan on payroll, but only 1.5 FTE. How will this be handled? Again, if your hours are under 40, if your normal working hours are under 40, then you could use the simplified method where each employee, since they're under 40, would automatically count as a 0.5. So if you had 2 employees before, 2 employees now, it doesn't matter that one worked 35 hours before and the new person only works 15 or 20. It would still be 1 employee, 2 half FTEs, and therefore there would be no penalty. If on the other hand, you do work a 40-hour work week, then you would be sitting with a 1.5 versus 2. Ed, what's your thoughts about the person who left on 3-1 that I replaced? Would you argue that since they left on 3-1 of their own accord that you wouldn't count them?
The way the IFR read was that you only get the exemption for positions that weren't replaced. So if you replace them, even with a half FTE, you won't get any exemption forgiveness.
So then in this case, then, hopefully your employees work less than 40 hours a week. And if they work less than 40 hours a week, like 35 to 37 and a half, then you'd be fine. There would be no penalty. If on the other hand, they work 40 hours a week, then there would be a potential issue.
So a couple questions on FTEs that are popping up that are going to, I think I'm going to try to speed round them for lack of a better term. So if your FTEs were, if your normal week is normally less than 40 hours, people are concerned they're being penalized. And you have to remember that the 40-hour threshold goes on both sides of the equation. So you're calculating your base FTEs on a 40-hour, and you're calculating your covered period FTEs on a 40-hour. So it's not going to affect you because it's the same denominator on both sides of the equation. So there should be no punishing for that. And if you go under the simplified method and count them only as a 0.5, again, you're counting both sides of it as a 0.5, and you almost have a potential ability to cut their hours under using them as a 0.5, because now someone who was 35 hours is now down to 20. Well, under simplified, those both are 0.5, and that's why I'm waiting for them to try to change that, just because that seems like such a ripe area for something to go not the way they want it to. So keep that in mind.
We receive payments for payroll from Medicaid for our direct support professional staff, but Medicaid will not pay payroll for administrative support. Are we eligible for forgiveness for the administrative staff salaries? Again, you may be eligible for all staff salaries. Again, we're waiting on the regulations from Medicaid, but clearly if you're not getting funded for your administrative support staff, those would be clearly eligible for forgiveness.
Okay, so questions are how the prorating is going to work. The proration is the number of days that are in your period, your covered period for incurred, versus how many you are paying on your regular payment that comes out next. So if your covered period goes through, say, June 14th, and you're paying a June 15th, you would do a 1-day reduction proration on that. So again, it's the number of days incurred in your period over the total number of days in that period itself.
And when you're doing either a paid payroll or incurred payroll, you have to calculate the FTEs for all of those periods to calculate what your average FTE is. So keep in mind that whatever payrolls are being used for the forgiveness are going to be the same payrolls that you're going to be using for calculating your FTE.
Yeah, and just on that point, one area that I've noticed, Ken, and I think you're going to disagree here, but the IFR says that the FTE count is over the covered period, the 8-week period. The way you calculate that, just to remind everybody, is it's the average number of hours worked per week divided by 40. That's how you get your average FTE count when it comes to that. So they're still using the covered and kind of like what was incurred over that. So I don't know if that period that comes in that you paid is necessarily going to reflect all of that on the FTE calculation side.
Well, the issue that you have there, and again, this is a good question. The issue you have there is if I've got a provider that has or an employer that has a 1-month lag or 2-month lag, because we have some clients with 2-month lags. Now, how does that come into play with respect to that covered period? Because you're not going to be paying those payrolls until, maybe July or August.
Yeah, again, and you are equally correct there, Ken. And they had to put these out as broad stroke as possible, and they haven't considered everything that, that's more of an outlier scenario than anything else. But another question that's popped up a couple times, this is being recorded. We will post it on our website, so you can come back and review all of this. So yes, this will be recorded and on our website with all of our other webinars.
Property taxes are not part of the 25%. Property taxes are not an allowable cost under this. Even if they're pass-through costs through your landlord, they are not considered, property taxes are not considered an allowable cost under the PPP loan.
So you prorate the last payroll for semi-monthly, number of days that are in the incurred period divided by number of days that the period has, that was in that period. So again, if it's 15 days are covered and 12 days are in the covered period, I take 12/15 of the payroll. They haven't necessarily given a 100% answer on prorate, but that's how a logical proration on that would work.
If you hire someone during the 8-week forgiveness period or covered period, that hired person would count towards the payroll and the FTE calculation.
Is interest on a line of credit an allowable cost? Interest on a line of credit is a eligible cost, but not a forgivable cost. So that's the one straddle that they have, that you can pay interest on an LLC, but you cannot get forgiven for it.
If a sole proprietor applied for a loan and the only person that worked for him at that time was himself, and he brings additional people on staff, the salaries he pays to those additional people would go towards the forgiveness. Again, he'd be limited to the amount of money, he or she would be limited to the amount of money that they received in terms of the loan, but any qualified salaries during that 8-week period of time, any staff that are paid would all qualify towards the PPP.
And I addressed this briefly, but I'll hit this again. For salary reduction worksheets, generally you're going to want to use rate of pay. That's going to be how you want to get to that particular item, because that's going to be the one that would exist, that would show the item there. You use rate of pay to determine if you've had a reduction, but you have to then make the reduction based off of what the pay that existed in place was. So if you have someone that was reduced by 25%, you would take, or sorry, 30%, you would take 5% of that reduction times the hours worked. So you want to use the hourly for testing it, but you want to use the total payment for the actual reduction itself.
Again, there's some confusion regarding pension plans. So again, if I make a pension contribution once a year, if it falls within that 8-week period of time, we're not really sure how that's going to be handled. The guidance isn't totally clear on it. If it is not paid within that 8-week period of time, then it clearly is not subject to forgiveness. From what we've seen so far, there's no provision that would allow you to prorate your pension contribution for the year to take 8 out of 52 weeks.
The owner-employee of a C Corp, the forgiveness IFR says that owner-employee compensation is limited to 8/52 of their 2019 compensation. Does 2019 compensation include healthcare premiums? And what if 8/57 of 2019 compensation, but payroll is less than 75% first quarter 2020 compensation for the owner-employee? So there's an uncertainty if healthcare premiums count or not. So I kind of addressed this early on, but some people are reading it that they do count. Some are reading it that they don't count. That was kind of one of the big things that popped out of the new IFR. I think push comes to shove, they're probably not going to count. I think they want to put parity across all different types of entities, but I don't 100% know that answer yet. And then, as far as we can tell, owner employees do not count in the FTE calculation and or the salary reduction calculations. So there should be no issue on either of those. They're listed in a whole separate place on the forgiveness application.
So if I had a group of employees and I have a different group of employees, during the base period, I had a group of employees, I have a different group of employees during the 8-week forgiveness period, it doesn't matter. There's nothing within the regulations that say you have to have the same employees. As long as you meet the FTE requirement, all of the salaries will be, all the allowable or eligible salaries will be forgiven. There was also a question regarding one-to-one aides, which are not being funded right now by SED. So if you're paying for aides that are still on staff and they're not getting funded, those aides then would be allowable for forgiveness under the PPP.
Are lease payments for company vehicles paid by company and owner's name forgivable? I'd say probably not. I would almost universally avoid that. I'd want it to be a specific company vehicle in order to count. So they haven't addressed that, but based on the way everything flows, I would say unlikely.
You want to grab another one? I'm just typing out an answer to somebody.
Yep. Can we deduct gas charges for the trucks used for business purposes? Yes. They specifically said trucks for gas is allowed, so that is a allowable transportation. That's the only item that's been given as an answer so far.
Commercial liability insurance is not an allowable cost.
Garbage recycling a utility. Nothing has made us believe that will be a utility at this point in time, so I would say no unless other guidance comes out otherwise, but they haven't even remotely touched on any of those.
I think Ed already answered this, but I'll kind of throw out the answer anyway. If someone worked less hours but still received the same hourly rate of pay, the only potential concern you have there is from the FTE situation, not the salary reduction, because their salary is exactly the same salary rate. They just work less hours, so therefore it becomes an FTE issue. And again, if they're still working for you and you use the simplified method, it would be considered a 0.5 either way.
So this one's probably a little more in your wheelhouse. I'll give my opinion and then you can kind of hop on it next. But teacher salaries. So you have salaries incurred, but normally they're paid out over the summer. Can they accelerate the summer payroll into the 8-week period? So I believe that they can, based on my reading of it, up to that $15,385 cap. You have to remember that you still have to contend with that cap overall. But if they are paid within the period, it is an allowable and forgivable cost based on all of that. Now, that may cause about 15 other violations that I'm not thinking of because this is more your world than mine, but that particularly I believe is okay.
So I didn't read the question, but typically, Ed, the way it works is people get paid over a 12-month cycle, but they only work 10. So I think the question, or what I would assume the question read, was that if they get paid over a 12-month cycle and we pay during that 8-week period of time, can I accrue the piece that is during that 2-month that we're not paying for until later? And I would say the answer there is no, because it wasn't paid during the 8-week period of time, and it wasn't paid on the next payroll.
Yeah, no, the question was, can they accelerate the payment in the 8-week period? I think so long as it's paid in that 8-week period, subject to the cap, it will be fine.
Okay.
That's how it reads as of right now. Again, as we've all kind of learned, this stuff changes every couple days, but that's really where we where we're coming in on that
one. Can you go back to the 35-hour week if the organization penalized for 35 instead of 40? There's no penalty for working 35 hours versus 40. Actually, I think it could be an advantage for you if your normal work week is 35 hours and not 40, because if your normal work week is 35 hours under the simplified method, that would be considered a 0.5. So if all your staff typically work 35 and you had to either let them go or furlough them or reduce their hours, if they were working 35 and they're working 20, in both cases, 35 is less than 40, 20 is less than 40. So in both cases, they'd be considered a 0.5. So I think it's really to your advantage that they used a 40-hour period for purposes of calculating the FTE, because there is no penalty because it's the same denominator during your base period and for the 8-week forgiveness period. And you get the benefit of the simplified method, which provides for a 0.5 FTE.
Owner salaries, FTEs, a different spot in the application. The owner employees, partners are listed on a separate spot on the forgiveness application. Based on the forgiveness application, where they're listed, they will not count towards the FTE calculation on either side. So they won't count in reference period and they won't count in the current period.
And I don't know how much you know about cash tips with respect to restaurants and how those cash tips get paid.
So cash tips were, they were specifically enumerated as something that you can include. Any reasonable estimate thereof could have been included as a pulled cost, as a cost that you can get a loan for, and can be paid out accordingly as salary as well. So they should have been coming and going on those.
But I guess the other question is, if you're in a situation where from a salary perspective, if someone was getting tips and now they're not, does that come into play in terms of hurting you in that?
Yeah, because you would have claimed that on your initial application because that was included in your box 5 compensation on your 941s or on your W-2s. So that was definitely claimed as part of the loan, and it will be claimed as part of the first quarter reduction. So you know, again, the goal was parity as to what people were being paid before, and you could have used an estimate of cash tips to get that.
So if it was in the initial calculation and now they're not receiving tips, that's going to be a reduction in the compensation.
I think even if the first quarter calculation is not there, I think that could very much be looked at as a reduction in salary.
But now, as long as that cash tip didn't account for more than 25% of the compensation, you'd be fine. It's only if it's
correct.
Over 20%.
Correct.
Okay. We were both talking, so now we have to jump into a question.
Yeah. We are a reimbursing employer for unemployment. Can this be included in our 75% payroll cost towards forgiveness? Number one, that answer has still not been given in any way. I did look into how the Federal Unemployment Tax Act is written. I think you'd have an interesting argument. I don't know if you'd have a successful argument, but I think you'd have an interesting argument. And the reason I think you're going to have an issue is documentation requested, in that they want it to be the tax itself. The way the statute is written is it's supposed to be a payment in lieu of tax. So I think it's an interesting argument. That's the first thing here. The second item that exists is, remember, at some point somewhere over this magical rainbow, there's supposed to be a 50% reimbursement coming of that back to the employer. So you don't want to double dip. But push comes to shove, as we're getting close to that time, I would say probably not would I try to include it. But if someone did, I could see how they can make an argument towards it, is really where I would go.
All right, so when we were talking earlier, we mentioned that under the new regulations that if someone went on unemployment, someone was on unemployment, we offered them a job and they rejected it, we need to notify unemployment that they rejected the job. The question says that under unemployment rules, it notes that an employee is eligible for unemployment if they are the primary caregiver for a child who cannot attend school because of COVID-19. If that is the reason that the employee cannot return to work, do we still have to notify state unemployment? It doesn't give any parameters in terms of when you do or don't. It just says you must. So the answer is yes, you have to notify unemployment. What we've been doing is we've been telling our clients to get a letter, and within that letter outline the reason that they're not coming back. We've created a letter with little check boxes and stuff. And then I would provide a copy of that to unemployment to show them. You're not looking to take the unemployment away from them. You're just fulfilling your requirement to notify. So again, I'm not saying that if you notify unemployment, people will lose their unemployment. You're just obligated to notify.
There's a question on a Schedule C here that a sole proprietor started December 2019. The 2019 Schedule C reflected 1 month of business, and that was used for the average monthly payments for the application. For 2020, payments will be less than the $15,380, will exceed the amount on the 2019 Schedule C, and the payments in 2020 reflect 2 months. So again, they haven't given a ton of guidance here, but from what was initially on the Schedule C, it seemed very, very much like the Schedule C loan and forgiveness were both going to be tied to the 2019 Schedule C, regardless of any 2020 changes. So to that question, I believe you're going to be limited to whatever the 2019 Schedule C was in place there.
So we actually have an auditing question. So
all right, hold on. Let me get the mute button going.
No, this has to do with an external audit. So when your external auditors come in and they're looking at the PPP loan forgiveness calculation and you claim more than 8 weeks of payroll costs because of the paid and incurred component of it, is that going to be a problem with the auditors? I think at this point, if they have an issue with it, I think you just need to highlight the regulations and hand it to them. And make sure that they understand what the regulations are. But I mean, as long as you're following the regulations, remember the bank is going to be looking at this, the SBA is going to be looking at this. Ultimately, you are responsible for making sure that you provide the information accurately, but I don't necessarily think you're going to have problems with your auditors. And again, if you do, I think you just need to make sure that they understand what the regulations are and share it with them.
Question of how do you return an SBA advance? I don't know that you can. Also, can you immediately return the PPP loan for any amount not forgiven? Yes, no prepayment penalty when it comes to that.
An employee on maternity leave is on maternity leave and they're being paid via Paid Family Leave Act. So you're only paying a small portion of their salary. Does that impact the FTE count and the implication that there is more than 25% decrease in salary? I don't think it would impact the FTE calculation because they are still an employee of your organization. They're just out on paid.
I think it's an exception under a voluntary leave. That's how I thought about it more. I would go exception voluntary for anybody on maternity leave.
And also, I don't believe it is a decrease in salary either because you did not change that individual's rate of pay. They just happened to be out on a paid family medical leave.
Mm-hmm. What if I have an hourly employee and the hours change every week? So the FTE calculation is based on a average hours worked over the 8-week period. So that will be captured in the number there. And the salary reduction will be based on the hourly wage. If there is a reduction in there, it's based on the average hours worked over the 8-week period.
I know that we got a question surrounding this in terms of the emails over the last couple of days, and there's a question here regarding 1099 independent contractors. Independent contractors that you pay to provide services to your organization are not included as salary. They are not a component of salary. You should not be including them as a use of the PPP funds, nor should you be using them under the forgiveness period of time. So if you're a sole proprietor and you have some outside contractors that work for you, it's only you, the sole proprietor, that is subject to forgiveness and use of the PPP funds. Any outside contractors are excluded because they are not considered payroll.
Do I need to calculate FTE for both the safe harbor purpose and the reference period covered period? Yes and no. If you calculate your FTE, you're going to need to calculate it, but if you reach the safe harbor, you won't need to do any of the other calculations. But the answer is yes. You need to calculate FTE on your safe harbor purpose. You'll need to calculate FTE for your safe harbor reference date, which is February 15th, 2019. You'll need to calculate the reference period and covered period only if you do not avail yourself and succeed using the safe harbor.
And from a safe harbor perspective and from an FTE perspective, if you have a decline in the number of FTEs, doesn't matter how big or small that decline is, that's the penalty. So if you were at 99.95%, you have a 0.05% reduction in your forgiveness. It's a straight calculation.
So something I think is an open point on the bills to extend this from 8 weeks to 16 or 24 weeks has to do with what happens to that safe harbor date. I haven't heard anything that's going to change anything on that from the bill. So as far as I gather, that safe harbor date still exists, but I wouldn't be surprised if they rework that safe harbor if they expand the number of weeks as well, but there's been nothing that distinctly covers that.
So a restaurant who was forced to close and has forced to close their dining rooms so that they don't have on staff all of their wait staff and bartenders and such. Again, you under the PPP loans, the individuals do not have to work for you. They do not have to provide services. You just have to be paying them. That was clear in the regulations that came out on Friday. So if you got the PPP loan and you're during your 8-week period of time, you can bring those people back and get forgiveness for the salaries that you're paying for those individuals, even if they don't work. I think the more important part is if this gets extended to 16 or 24 weeks, that's going to be much more beneficial to restaurants, because if we get to a point where some of those restaurants are able to open, then they will actually have salaries during that 16 and 24 week period of
time. That one. If someone worked 20 hours a week before, but they only work 5 hours a week now, we don't get penalized. What about the salary difference? You get penalized on an FTE reduction basis unless you elect the simplified method, in which case those are both 0.5s, but you don't get double penalized on the salary reduction. The salary reduction is based on a rate of pay, generally speaking. There's no double penalty for a reduction of hours and a reduction and a resulting reduction of salary.
On the refusal to return, and Ed, this is a question that I want to get clarification from you also, but you should be trying to get a written letter with respect to anybody's refusal to return. I mean, that's something that it specifically states that you want to get that in writing. If I send an email, Ed, to somebody and I ask for a return receipt, I can see that they read the email, but they don't respond, and I put in the letter that I need a response by, let's say, June 1st, and they don't respond. Can I assume that the fact that they've read it and didn't respond, that they're not going to be returned, and then I notify DOL of the unemployment?
Yeah, I believe the way that worked out was on basically what you said, that you have to go through all reasonable efforts to try to contact someone and have the proof accordingly. So that sounds like you have very much done that. I'm just trying to pull up how much IFR it was. But from what I remember, it was you have to go through all the reasonable efforts in order to do that. Started our funding on Friday, April 17th, and then you can start your alternative covered period the following Wednesday, April 22nd, the start of your new pay period. Yes, that is, you are paying at least bi-weekly. You can wait until the start of your next pay period. So if you start on April 17th, you can start your alternative cover period on April 22nd.
There's a question here, which I'm not sure necessarily what it means. I'm going to read it out, and maybe you can interpret it better than I can. It says, is there a requirement that the initial disbursement of PPP funding must take place within 10 days of fund availability? I don't know if
so that was it's a lender-related question. That had to be funded within 10 days of getting the SBA number and SBA approval.
Okay, but that has nothing to do with them spending the funds. It just has to do with...
No, it has to do with actually getting the funds into your bank account.
Okay.
Is the 25% other calculated on the total amount of the loan or on the payroll forgivable? So they have a 3-layer calculation on this. The first layer of the calculation is your total loan. The second layer of the calculation is your modified loan, which is your amount spent less any reductions. And your third calculation is your total payroll costs divided by 0.75. So you had to pick the lowest of those 3 amounts. So the 25% is calculated relative to the total amount of payroll cost spent. So if you, in theory, spent $100,000 on your payroll cost, that would mean that $33,333 of non-payroll costs is forgivable for up to $133,333. It's a ratio to your payroll cost.
If I have a nonprofit organization that provides services to a hospital, I provide those services normally in person, but now I'm doing it virtually.
I answered.
You did it? Okay.
Yes.
Sorry, you didn't mark it off.
That was an email one.
Okay.
Yeah, that's.
We are school and teachers sometimes receive stipends. Therefore, in 2019, they may receive 1 or 2 payrolls where they made an annualized 100K. Teachers then go on the table too. I think if total compensation puts them over that 100K with including the stipends, not just one particular payroll, I think then yes.
The way it's been written is, the way the law literally says is that did not receive total pay in excess of 100,000 annualized for any pay period. So actually, to that question, Ken, I'm going to disagree and say that based on the way the law is written, and this is a very popular question. I think most people are thinking the way that you're thinking, and you're probably right. But what the law technically says is that anybody who receives annualized pay of over 100,000 for any pay period goes into that second box. So I think the way they wrote that and the way that they wanted to work are two different ways, and it may end up going closer to what Ken said. But under the strict letter, they would go into that second category because they have one payroll period over 100.
Okay. On the issue of government-funded reimbursement contracts, would a safe approach in the absence of other guidance to simply not charge the government funder for any reimbursement during the covered period? You could then seek a budget modification with that government funder. That's potentially possible, to take the PPP funding and then try to get the government funder to push the funding out to a later period so that you're not getting funded twice, once through the PPP and once through the government fund. If the government will allow that money to roll over into a later period, then that's great, and that would be clearly an answer for this if that works.
Is there a possibility they will change the 75-25 allocation? It's come up a couple times. The Senate bill, House bill has it, the Senate bill doesn't. So I don't know if until they change it, they're not changing it. If that makes sense, you have to work in that framework until it officially changes.
If someone got a PPP, so the question is, I saw something said people can reapply for additional PPP funds to account for the guaranteed self-employment of partnerships. It was from a bank, or I think another loan server I got emails from. I thought you got, go ahead.
Yeah, so there's a limited reapplication. It was the only one that was allowed. Was you could reapply if a partner wasn't included within the initial payroll calculation. That was the only one. It was a special IFR that came out on that. It came out on May 13th. It was an IFR on loan increases that was specifically for partnerships that did not include themselves. Otherwise, you are right. It's one bite at the apple only.
What if, due to the uncertainty of pandemic's future impact, expenses were reduced, including changes in health coverage that will be reduced considerably? Can we use these funding to hire staff or put principal owner on payroll? The answer is yes. I mean, you can use, if you originally got the PPP loan and within that original PPP loan, you outlined that there were going to be certain health insurance costs, and now you've reduced those health insurance costs, you can still use those dollars to cover any other allowable costs during that period of time. You're not limited to exactly what you had. It's not the exact same employees. It's not the same exact hours worked. It's not the same exact dollars paid for each individual expense.
If we don't use all the money we receive, should we send it back or save it and use it as a loan if we need it? So anybody who's been on a couple of these webinars knows that I had a suspicion that there was a chance they were going to make people that didn't use it all pay it back right away. That has not come to fruition at all. So based on that question, You can use it as a loan as you need it. I still wonder if the restrictions onto how you can use it will still exist. My anticipation on that would be yes.
Someone's asking about the base period used for determining forgiveness. The two base periods that are out there are, as I mentioned earlier, February 16th of 2019 to June 30th, 2019, or January 1st of 2020 to February 29th of 2020. And then there were also two safe harbors. One of those safe harbors was the individual must be employed on June 30th, 2020. And Ed, what was the other safe harbor base period?
Well, there's only one safe harbor for FTEs. It had to be employed by June 30th, 2020 versus February 15th, 2020.
Okay.
Yeah. Another question on the safe harbor, which I think is a really interesting one, that the 8 weeks goes beyond June 30th, and I have to terminate someone after my 8-week period, and I apply for forgiveness, would I get penalized? So if your 8-week period straddles June 30th, they haven't really addressed how that's going to work yet, but I would think that the safe harbor still exists. So long as you're covered by that date, you'll be fine. And anything that happens after won't cause an issue. And again, anything that happens after your 8 weeks runs out and before June 30th, so if you're one of the early recipients, that won't have any impact, with the exception of you won't be able to avail yourself to the safe harbor.
If you want to give an employee a bonus hazard pay, would that have to be given by a certain date to be covered? I think it would have to be paid during that 8-week period of time.
Yeah, it has to be paid. Yes, correct. That's paid is the key operator there. You can use, is it correct that you can use 100% of proceeds on payroll? Yes, you can use up to 100% on payroll. The only limit is you have to use at least 75.
Says, I was advised that the FFA requirement can go away when the loan is forgiven or paid back.
I don't know what the FFA requirement is.
I'm not sure either. I thought maybe you knew.
No, I'm unsure what the FFA requirement actually refers to. There have been a couple questions on multiple dates of pay. From my experience here, I don't know how they're necessarily going to handle that. If I had to take a guess, it'll probably just be the average rate of pay paid, and that's what you'll use for the comparison. But they haven't made any guidance as to what multiple rates of pay and how that would work on a salary reduction.
So if someone was making $500 a week as less than one FTE, but now makes $200 a week as less than one FTE, what will the penalty be? It depends. If the rate of pay that they're getting paid is the same, they're just working less hours, and you go with the simplified method, there would be no penalty. If the rate of pay was decreased by more than 25%, then there would be a penalty based upon the amount that the rate of pay was decreased by more than 25%.
The FTE base periods, again, those are either January 1st to February 29th, 2020, or February 15th, 2019 to June 30th, 2019. You can use either of those base periods at the borrower's choice.
What if someone voluntarily quit during the compensation comparison period and we never rehired that person? That person's FTE, if they voluntarily terminated, document the fact that they voluntarily terminated, then that person's FTE would not impact you negatively in doing the FTE calculation.
Can future rent I can't speak anymore. Can future rent be prepaid during the 8-week period? As far as we know, the answer is yes. They have only outlawed prepayments on mortgage interest.
I would be a little careful on that.
I would be careful too. Don't disagree.
Worth of, but again, if you're sitting here and your loan expires on, June 28th and you pay July rent, on June 27th.
Again, and given that 75-25 limitation, I think that there's going to, that they're relying on that to be the effective curve on the, use of prepayment of rent. I think that's why they haven't gotten so crazy on that one, is that 75-25 limitation will probably have an issue with that.
Someone asked if the reference period for payroll costs be the 2020 Q1 941 line 2. The,
line 5 of anything, but the
but the reference period goes from January 1st to February 29th, so the whole Q1 wouldn't matter anyway.
that's for payroll cost, right? If I use an alternate period for my payroll, should this also be used for non-payroll expenses? Nope, the non-payroll does not get affected by the alternative covered period. You only can use that for payroll.
We had part-time employees leave and go on unemployment because they lost their full-time job at another employer. How does that affect us? From a PPP perspective, again, if they were on your payroll as part-time and they no longer, or if they still work for you, then it doesn't impact you at all. So if they work 10 hours a week for you and they still work 10 hours a week for you, the fact that they lost their job somewhere else doesn't impact you at all. If they go on unemployment, they can only go on unemployment for the portion of the hours that they worked for the other job. They shouldn't be going on unemployment for the hours they worked for you.
All right, Ken. So with that, we put 11:30, got a little bit over. Obviously, I think everybody who stayed on, I actually have to jump on to something at 11:30. So I think with that, we'll probably call it a session. I hope everybody found this informative. Again, we will be posting this on our website at some point today. Depends how long it takes to record. Once that's done, we'll definitely put out the email blast on that. I did hope everybody found this informative, and I thank everybody for their time.
If anybody didn't get their questions answered, and they feel that we didn't touch on the topic as part of this, feel free to send us an email, and we will try to answer it from an email perspective.
Email Ken. He's the one that made the offer.
No problem.
All right, thank you.
Thanks. Take care.